Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your ponds. Good morning, everybody. Hang on, waiting for the event to load so I can pull up the chat. Today it's a Wednesday, September 12th, 2018. This is your daily Forex trading strategy session hosted by Forex.Today. Please be sure to subscribe to the channel if you're watching this live. If you do so, then you click the little belly thing. And what happens is when I click start to start the live webinar, you're pinged and brought directly here if you choose to join us. So it makes your life super easy. So anyways, that's the YouTube channel at Forex.Today. Hang on, where's the chat? Oh, there's the chat. I see the chat now. Cool. So good morning, Jeanette. That's what people say. That's what people say. Sorry. I was playing loud music with my children this morning. That's how we roll. So anyways, hey, good morning. Hey, there's room to be happy. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for meeting with me in my office today. That's what people say. Trying to get the day. There we go. Well, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So this is my opportunity to say, hey, if you're brand new to these webinars and I haven't introduced myself, let me just say, I've been trading currencies for a very, very, very long time. You know, we're talking about 15 years. It's a very long time. I've learned a lot of things along the way. Most things are pretty standard. I don't have anything crazy or proprietary or radical. My trading is based on very sound, very disciplined, very conservative trading approaches. I don't try to outsmart the market. I try to figure out what the market is doing. The foundation of my trades are based on fundamental analysis of central banking policy, what they call macroeconomics. And from that, I use technical analysis to confirm the direction of the market under current market conditions. Maybe it agrees with my bias, my fundamental bias. Maybe it doesn't. Well, that'll change my expectations for my trades, or maybe my aggressiveness for my entries. And then I use technical analysis on even smaller time frames for tactical entries, literally deciding when to pull the trigger. I think that makes a lot of sense. So these webinars are designed so that I share my many years of trading experience. If you think about it, I first started trading Forex when the retail Forex industry was born. So, in fact, I probably taught your last guru how to trade, but he flunked out of it. Anyways, the reason we do these webinars is pretty simple. I'm going to help you become a success, or do my best to help you become a success, or lead you on a path that will lead you to success. But if one day you do become a success and you become confident in your ability to trade Forex, like I said, conservatively with discipline, and you decide to trade real money or start a trading firm and trade other people's money, when you're ready to make these decisions, perhaps you'll choose Traders Way as the prime broker for your Forex trading business. Just out of loyalty and respect. The way that we look at it is we're investing into you up front by making these webinars available to you. Right? It's literally a helpful resource. right? And there's costs behind providing all these, and certainly cost of time and effort. But we're in it for the long run. It's the long game. So if I can help you be a success, and if I earn your loyalty and respect, and if you eventually, when you're ready, trade real money and choose Trader's Way, then it works out for both of us, and it's a symbiotic relationship. So that's what we're doing. We left off here, USD ZAR. As you can see here, nothing's really changed. Europa, hi from Europa, Olivera says. Okay, this is where we left off, and if you just look, I got this area here is supportive. General plan here is South Africa, even though the rand is very, very cheap at the moment, or weak at the moment. Maybe there's room for it to get weaker. I think we're pretty close to what you'd call an all-time low for USD South African rand, ZAR. But it could always go lower. I think there's, like that's pretty bad, right? Well, as they say in, was it Swahili? Jumbo! I think that loose translation is, may your day not be as difficult as usual. Well, things can get even more difficult on this one. Very interesting, right? All right, so that's just where we happened to leave off yesterday. Let's go back to the typical setup. We'll do gold, we'll do oil, we'll do Euro USD for those who have asked several times. Yes, of course, we'll do Euro USD. Okay. And if you ask in the chat to cover a certain currency pair, I'm happy to do that. You guys happy? Is everybody happy? Loving life, living large and in charge? Hope so. Euro USD on a 4-hour? Jacques Nadet says, hey, the government's doing their best to kill the rand. Well, you know what? In certain circumstances, like for China, for example, a weak currency is fantastic, right? Especially if you export. The reason for that, or let's say one thing that makes that plausibly okay, is that you do export a lot, which means you have a lot of foreign currency. Okay? And if you have a lot of foreign currency, you can borrow money from foreign governments or foreign banks or foreign investors. And you have all this foreign currency, so you can pay them back with that foreign currency, right? So I don't know if South Africa is exporting enough. Yes, for example, South Africa has a lot of gold. The problem is they pull it out of the ground and they sell it in the open market for US dollars. So they're not selling it in rand, for example, and then bringing the dollars in. They take it out of Africa, sell it in the open market. Now they have US dollars, and then what do? Instead of bringing it back to their home country, in this case South Africa, they simply pay their workers in rand and laugh all the way to the bank. Because they sell it for dollars, but if the rand gets weaker and weaker and weaker, then they pay their South Africans in rand in that typical salary, which for the gold producers, the mine owners, the workers get paid less and less and less and less and less and less in dollar terms. But they're selling the gold for dollars, so it's more profitable. The weaker the rand gets, the better it is for them, because it only affects the workers. Kevin, it's not available yet, but it's on the way. Okay, it's on the way. So anyways, let's go back to this Euro USD. I show you this because we have to identify support and resistance. Trying to figure out where we were yesterday, 6 candles ago. Not a lot has changed, right? This is where bulls buy, right? This is where bears sell. You notice the one thing here? On a weekly basis, the bears are selling at R1. That's an inside week. Chuck says South Africa has a lot of dollar debt. Yeah, so that's what I'm trying to say. If China's sitting on a whole bunch of US dollars, then it doesn't really matter that their currency is weak because they can just pay back whatever loans they have in dollars. So going to now analyzing Turkey. Turkey has a lot of loans in euro and in dollar. So if they don't have euros and dollars in the vaults, then they have to go to the foreign exchange, sell their currency, which weakens it, and buy either euros or dollars to pay off their loans. So then the next time they have to pay more loans, they have to go to the market. But this time the Turkish lira is even weaker than before because the last round of buying foreign currency weakened their local currency. So now they go and they have to spend even more to get the new money to pay the loans and weaken it further, right? And then because the currency keeps weakening, any let's say billionaire with money in Turkey says, "Oh my gosh, my money in the vault is getting worth less and less, and I have all these interests in other countries." You're a billionaire. So a billionaire would have interests in Europe and America and other places. So the billionaire's sitting there like, I can't let my net worth keep, diminishing in purchasing power parity terms, right? In parity terms. So I'm going to move my money out before things get worse, which then weakens the lira further. And now you have flight and all this. And then now, in today, right? Now you need way more Turkish lira to pay off the next round of loans. And it's a vicious cycle down. And if they just had low foreign reserves, they would be fine. Well, why don't they have foreign reserves? Well, apparently they don't export enough. So we have to figure out, China wouldn't be in trouble because they export enough. Turkey's in trouble because they don't export enough. How about South Africa? And I'm only suggesting, well, some of their exports are in foreign terms, but I don't think the foreign currency actually makes it to South Africa. But beyond import-export stuff, I believe the weakness in the rand is human-generated, and not by purpose or even by porpoise, but by unnatural means in a very bad non-economic way. So, and say it differently, South Africa created their own damn problems. Okay. That's what people say. All right, so anyways, inside week, which means the very best a bear could really expect under these technical circumstances is a weekly R1, weekly S1 move. And you can see bulls are probably okay with that. It's still buyable down there. Like I identified yesterday, anywhere between this big black line, which we call the central pivot point, and down here. Now, really and I'll put it back the way it was, what a bull wants is this. Okay? That's what they prefer most. That's okay. It's just sloppy. Okay? Maybe not the greatest opportunity in the world. Maybe there's something better to do. All right, so let's do some measurement of macroeconomics. Okay? If you go back, way back to Monday's webinar, I said, if you're a buyer of oil, you want to buy it here or you want to buy it down here? Wow, we're kicking butt. Woohoo! Nice. Look at that. Easy peasy lemon squeezy. Shoulda, coulda, woulda. Isn't that great? There was only two prices. I think I said it out loud, like, you know, that whole 66, 66 area. And the other one was like 63 or 64 or whatever. So that's really cool. I'm glad that worked out. You should be in around $67. It's now $69.66. If you had bought like one contract, that's $2,660 profit. Pachow! Yeah, but it took 3 days, right? I know you prefer you try to get $1,000 per day, but you know, it's all right. Here we are doing nothing on gold. Maybe that's why dollar's not moving. Who knows, huh? Brooke caught gold 1188. Oh, snap. Get out of here, really? That's a good trade. Hey, good morning, RJ. So anyways, yeah, we had that, didn't we? 1188. Yeah, I'm pretty sure we talked about that yesterday. Brooke got it at 1188. Cool. And it was an exit point for bears, right? And it's only an S pivot on the weekly. So it's similar to whatever currency pair. I guess it was euro dollar. On a weekly basis, it's very mediocre. Not the trade, just market conditions. It's an inside week, which is really a ho-hum, it's not really going anywhere kind of move, right? Yeah, John, a great way to track currency futures would be the Commitment of Traders report. And that's released by the Commodities Futures Trading Commission every Friday afternoon. Okay. Joe, yes, I'd be happy to look at USD CAD. So John says, yesterday it was confirmed to me that commercial traders are largely using the futures market. Okay, well, sort of. Depends on who you're talking about. Commercial traders. If you're talking about an institution trading, let's say, commodity or a global corporation with companies in multiple countries and stuff, that's one thing. But there's also banks. Now, banks wouldn't be trading futures. Banks move cash around, right? And that's what we see in the foreign exchange market. We're looking, let's say, at euro dollar. This is gold, but let's say we're looking at euro dollar. That's a spot market. That's cash exchanging hands, right? Okay, John's got some other tool. Okay, cool. Okay, so banks are moving cash around, whether it's a commercial bank, an investment bank, a central bank. They move cash around, right? But then those that are hedging, right? Those that are hedging are going to be using futures, most likely, right? All right, Maurice, we could always take a look again. Oh, well, anyways, let's go back to that. Yeah, neither here nor there. How does it fit in your longer term goals? You can see, like, a healthy uptrend would be higher high, higher low, higher high, higher low, higher what? So we knew sort of in here this was slowing down, and we're not really going anywhere at this moment, right? And now even this part is being held up on this support, which we identified like 2 weeks ago. I don't think I'm going to be able to grab it though. That's what people say. Yeah, there it is. So, you know, are we getting squeezed in here and for a pop? Roger. Wow. He was just doing his job. Or her, sorry. She was just doing her job. Okay, pig doggy, pound dollar. Same thing, going nowhere fast. Okay. You've probably, right? How do we break this down? How do we say in English? Bulls had their opportunity to buy at 29. There hasn't been anything really to do since then. That's that. Bears. What do we say to bears? Bears didn't get an excellent entry, and bulls didn't get an excellent opportunity to exit. So we're just sort of caught technically, but not really going anywhere intelligent. Okay? And like a few of these currencies got hung up on, in this case, an R1. And I'll remind you, R1 and S1 are not that important to me. Oh, John, you need a real-time monitor of currency futures? Like you specifically want to monitor prices of futures contracts in real time? Then you would open up a futures account with a futures broker. So you can trade soybean meal and euro futures. Okay. But again, all you're doing, John, and I'm not sure what tool you're using and all that or where the interest came from, but you're isolating yourself into commodity, most likely commodity hedgers in the United States. Okay, so whatever is interesting you, it's fine, but you're not truly monitoring the whole foreign exchange market globally. You know, you're not truly getting central banks and stuff. You know, those markets are going to be much smaller. I mean, they're not going to be illiquid because it is a big market, but yeah, they're going to move more specific to that, like when markets open, when markets close. But with that, I mean futures trading pits and stuff, and right? Right. But you want to watch them. You don't have to trade them, but you can watch them. But just realize if you're seeing something on those charts and you're like, oh my gosh, look at that move. It's clearly a futures thing. That's true because it's going to be less of a market. So for example, when I first started trading Forex, it was much more volatile and there was these jumps and moves and the time of day was even more important than it is now. And, you know, things would just chop and jump and move and you'd say, aha. Now it's more mature and smoother because there's more people involved and stuff. So, you know, so if you want to track that for a while, that's what you would be. Okay. That's what you take a look at. I'm not sure what your angle is on it. It's cool. Maybe there's a spread. Right? Because what you could do is you could buy the cash and sell the futures, stuff like that. So, for example, you're not going to get paid interest on a futures contract like you can in Forex. Your leverage is only going to be 40-1 in futures, I believe, where, like in the United States, 50-1 is what you get in the cash market. So I think the cash Forex market's way better. But if you got a thing, then boom, that's yours. Then go for it. Well, John, like people in the futures market, for example, have unique opportunities. You could sell Chicago wheat and buy Kansas City wheat. You could sell red wheat but buy, I don't know, gold wheat. there's different types of wheat, right? So you could trade different types of wheat, like the way you could with oil, right? You could sell Brent but buy WTI, right? Well, you could buy Kansas City wheat and sell Chicago wheat, and what you're doing is you're trading the spread between the markets. Or you could trade let's say in Kansas City, red wheat versus a different type of wheat, and now there's an inter-product spread. All that kind of stuff. But you're living in a whole different world. What I like about Forex is the leverage is a little bit higher, and you can make trades based on long-term macroeconomic central banking type markets, which tend to last years. I can hold a trade for a very long time and get paid in real time and collect interest in real time. Right, so John says reasoning that it'll help swing trading. Okay, just realize you're not going to collect interest. And you need to find out if, I believe your futures contract is mark to market, so I guess that's fine. But the thing is, it's just you're not going to be able to collect interest. And a big part of swing trading, if not now, but certainly sometime in the future, based on what's happened in the past, like 15, 20 years ago, if you were a big high roller foreign exchange trader, you were making a killing on collecting interest. A killing. It was sickening. Right? Like literally hundreds of percent. Because remember, you're leveraged, right? So to know that you're going to make 3 or 4 or 5 or 600% per year on an investment, just collecting interest alone, right? So in the future, if you're making that same trade in the futures market, and you're not collecting the 400% a year in interest, right, then you're giving up a lot to trade a futures contract, right? So I don't know. But yeah, right? I'm not saying no. All right. So with this, we're kind of moving sideways. We're not kind of doing anything. The R1 is a cautionary tale. You were supposed to buy this on Monday. If so, you were supposed to head it up into this price. We missed it. We're not trying to get back to it. Maybe this kicks off this roll reversal and then goes up to the red zone. But it's one of these things where if you sold on Friday, if you were a bear, you're probably roughly break even or taking a small loss or something like that, or maybe a small win, but doubt it. And bulls, you would have bought Monday morning, and you were loving it. You were certain you got this right. Now you're not so certain, but at least you're profitable. And you're hoping to ride this 4-hour 21, but it seems to be bending, So it's just like mediocrity. You're either losing a little bit as a bear or you're making a little bit as a bull. And right now it's still more bullish than bearish, but good luck with that, right? Aussie yen. Our thought process here is it should go up and then probably will fall. That's what we said on Monday, right? Bounce here makes sense. Bounce here makes sense. Probably will head up here because it's still technically bearish, even if you're a bull, like obviously a bull bot here. But even if you're a bull, or even if you're a bear, all of this stuff you're perfectly fine having it come up into this roll reversal, and then more likely than not, because of the downtrend, lower low, lower high, lower low, okay, more likely than not, you're going to get a lower high, lower low again. Why? Well, because this low is lower than that low, and this low is lower than that low, so it should make another lower low. And if it doesn't, technically speaking, that would be important. DI says, I love your vids. Cool, bro. What are your thoughts on strictly trading the 50-61 fibs as a strategy? Technically, it would be 62. Why would you not use the 3A2? Right? Why would you have not used a 3A2? So, right? Let's do this one. I don't really care if it's a 3A2 or 618. That's the sweet spot. Okay. The first part of this is you have to confirm it's making a higher high in an uptrend. In this situation here. So if you get this situation, but it's a downtrend, it ain't going to make a higher highs, right? A lot of people get this all mixed up. Fibonacci is a trend trade. So if it's trending up, it helps you buy dips. If it's trending down, it helps you sell rallies. So anything in that gray zone, I don't care if it's a 44, right? I don't care if it's a 55 or a 52 or just anywhere in there is enough. Why? Because the numbers are not magic. There's nothing magical about it. Okay? You're buying something on sale. That's all. You know, so, use only 50 to 61 as a fib strategy. Well, first of all, like Fibonacci, once again, is not even really a strategy or even a methodology. I think a lot of people sell it because it's super easy to understand. You could still screw it up and use it in the wrong way, which most people or many people do, but it's still pretty easy, right? So it's very sellable, but you can't do it just on its own, really. And if you're using it just on its own, you're probably doing more price action than you are Fibonacci. So really, Fibonacci, price action, Elliott wave, they're inevitably so similar or so interlinked that they end up being kind of the same thing. Okay? The bottom line, though, is it's simply a tool. Okay? Like, you totally don't need it at all. Because all you're doing is buying a dip. So how, right? Like, could I add a 21.4 to this? Sure. Will that work? Yeah. Because all you're doing, think about it this way, all you're doing in an uptrend is buying a dip. Now, if it made 100% retracement like this, right, that's not really a dip, isn't it? That's like a full-on reversal, right? Let's do it that way. Just look at this part here, right? If it went up, if it went from A to B and then B to C, and C is equal to A, that's not a retracement, bro. That's like a reversal, or even worse, lower than A, right? Those are reversals. But if your job is simply to just buy a dip, right? All you're looking for is some sort of evidence that it's turning back up, and you buy it. Right? The Fibonacci is not going to tell you if it's an uptrend or a downtrend. You're going to have to just make a decision. So I look at this. Okay, let me delete these. Okay, all right. So I look at this and I say, oh, it's a downtrend. Cool, done. Fibonacci didn't tell me where, but that's fine. I don't have Fibonacci on here, but you can see my plan is to sell a rally. Why? Because my analysis tells me it's bearish. Now, of course, I could go further out and find out it's not as bearish as I would like, but let's just agree out of simplicity. This is bearish. Great. I want to sell a rally. Done. Now, do I need Fibonacci to do it? No. Has it retraced at all right now? Yeah. So I could sell it whenever I want. I don't care if it's a 382, 618, 44, 50, 58 and a half, 67. Doesn't matter. Okay? One of the things I use instead of Fibonacci is I look left and I look at things like, you know, this is potentially a role reversal. It was support before, so it could be resistance now. Cool. So I would like to sell somewhere in there. Is that a 618? Yeah, probably. Maybe a 50%. Great. But that's just another means for me to look at a price that I would like to sell. Fibonacci is yet another tool. So I take the low into the high, right? Or I can subjectively choose something else. Okay, I'm going to go this way. This high to that low. Right? So where's my sweet spot? Somewhere between the 382, okay? There's the 382, there's the 50%, there's the 618. Cool. So I want to sell somewhere, and that's the sweet spot. But I already knew that. Okay? Oh, yeah, John, yeah, well, yeah, that's where swing trading comes from, of course, yeah. So anyways, going back to this, guys, we already knew that that was a sell zone. Well, I use price action, and I use a pivot point, and I can eyeball what a 50% is. I don't really care if it's a 382 or 618. Okay, but nonetheless, it all works, and it's all the same and all related. We just have different names for it and all that kind of stuff. But I want to make the point that the most important part of your analysis here was that it's a downtrend and you probably want to sell it because it's a downtrend. Right? Going back to John's conversation here, you know, these traders are using the futures market to swing trade, not foreign exchange. And well, the reason for that is, yeah, they created them. Okay, they created my style of swing trading, which is based on pivot points. Pivot points came from futures traders, and then over my career, more and more traders moved from futures to Forex because it was the hot new thing. It was the Bitcoin of the time. So a lot of futures traders moved to Forex, and they brought their strategies with them and started implementing pivot points more and more and more to the foreign exchange market. Okay. So, yeah. So anyways, guys, you know, from there, you know, any pivot you want, or sorry, any fib you want, because all you're saying is it's rising and I want to sell it because the market is bearish. And after that, whatever decision you made is probably correct, unless the whole entire market reverses. And that's really the situation where you want to lose money, where it wasn't you being wrong per se, but the market changed. It wasn't like you got unlucky because news came out and the price popped 30 pips and you got knocked out. You know, I'm talking about, the Aussie dollar went from bearish to bullish, and some of these things have been bearish for months. So for you to get knocked out, trading in the direction of the trend, and the trend has been lasting for months, for you to get knocked out now because the entire market reversed would be, well, technically and likely fundamentally important, and maybe you should consider being a bull instead of a bear. Why? Because what occurred was significant enough for the whole market to change, not just you getting unlucky. Okay, USD CAD. I got lots of requests for Kitty Cat. That's what people say. That's what people say. I need to get a new Windows computer dedicated for trading. Any suggestions? And last you need nothing special. If you're running Windows, you need nothing special. I don't have my other laptop here. I have one computer that I think I paid $250 for. Works great. This one I'm trading on. So that I think I have the Acer I paid $250 or $275 for. It works fine. 1080p. So it's got large enough screen to run MetaTrader fine. Then I got this computer, and this is, I think, a Dell. I don't know. Yeah, no, it's an HP. So I have an HP. It's a 18-inch screen. I think it's a little bit better than 1080p. Cool. I think I paid $500 for it. It's big. That's why I have the smaller Acer, so I can run around with that. And then I have a 10-inch 4K, no, not 4K, 2K, a 10-inch 2K screen tablet that runs Android and it runs Windows. And that's what I coached from in Napa Valley and in Hong Kong. So like when I was in Hong Kong, right, we held these webinars every day for like a week or so. And I'm on the 140th floor of the Ritz-Carlton in Kowloon, right? Remember that? That was fun. Miss you, Daniel. Daniel and I had a lot of fun. Daniel was hanging with me every single day. So, right? But anyways, that is a tablet running Windows 10. Right? So even though it's 10-inch, it had a 2K screen, which is twice the resolution of this. So hey, it was great. So that worked too. So you really don't need much. Yeah, well, your computer must be very, very old or very, very slow. So therefore, yeah, time to get a new one. So what I'm trying to say is, as long as it's Windows 10, you don't need much. You don't need much RAM. You don't need much space. I mean, depends. If you're going to start doing family stuff with it, you might need more. But like my trading computers, all it's running is MT4. It takes no processor speed. It doesn't take video card processing. It doesn't take up space on a hard disk. So you can have like 4 megs of RAM, a crappy video card, and a very, a 5200 RPM, a 250 meg hard disk. I mean, and an MT4 would run just fine. So anyways, let's go here. By the way, I'm thinking of rebuilding my rig behind me. And I've been looking at all kinds of things. And I don't know. I can't find my happiness in my new rig to plan. I think what I might throw down is 3 4K screens, 3 big ones, like 3 60-inch 4K screens, and mount them vertically. And that way people will stop heckling me on YouTube. They'll say, "What an idiot. He has 18 screens. He's such a loser. I have 2 screens and I can trade just fine. Why does Wayne have 18? What an idiot." Okay, so maybe it'll help if I only have 3 screens. Okay, so anyways, going back to where we were, it's just, again, I'm sure we've kind of said it before, it's just we're stuck in the wrong place. Now, it's kind of interesting, right? Where we knew 2 weeks ago, or let's say at the beginning of the month, it was supposed to pull back and it didn't. So that means it's running hot. Running hot means you buy it off the 4-hour 21. And then you get to this situation where, we're using old prices here. It used to be supportive, then it became resistance, and then should be support again. And then that didn't work, and all this stuff. It's just very mediocre. The only hope we have now is this idea that we broke out of the range, this channel to the downside. And it kind of is a scene of a crime thing, right? If we don't stay above the central, I'm going to go neutral on it, right? So we're looking for the breakout, retracement, and now maybe up, and the target's still the same. Doesn't feel like we're going to get there this week, but of course we could. Okay, so it's just like many of these currencies over the last 2 days just went from okay moves to some okay setups, and then sort of just disappointing the last couple of days, right? Just nowheresville. It's like, what's plan B on here? Wait for it to go all the way back into the range and buy it here? That's sort of plan C, isn't it? Like, you could definitely buy it here. It's just really not where, it's not really where you want it to, right? Scott says, do you see USD yen going up? I don't trade USD yen that way, because very often USD and yen are both strong at the same time, or USD and yen are both weak at the same time. So I'm not going to trade them together. Now, you totally could, but there's other things going on also I didn't like. So let's say USD yen is trending in a particular direction. The other thing is the average daily range on a yen is much, much, much smaller than something else doing probably the same thing. Yeah, John. Yeah. So that's what I'm looking at, where there is software that will break it down. So my 170-inch 4K screen would actually be the same as 6 22s. And software will break it up so it actually makes 6 22s. 22, 22, 22, 22, 22, 22. It'll actually break it up and make it like it is a virtual screen. so you can manage, and all that kind of stuff. So I've seen it, and I don't know. It's just like, and the thing is, I've gone shopping and I've looked at it and I've priced it out, and I don't know. It's just it seems like a waste of money because I already have something that works, right? So I don't know. I'm cheap. All right. So anyways, just, ho hum on this. Just ho hum. There's a lot of hoing and humming here. So I'd like to see some movement. Yen yen. Okay. Pulled back too much. Risen up. Stuck on resistance. Makes sense. You had a perfect buying opportunity on Monday. Should have been taking profit on Tuesday. Counter trend traders have the opportunity, or had the opportunity, if they wanted to sell, they could. The next bearish move could be next bullish move could be buying off the 4-hour 21. However, typically a counter trender would take it back to the central pivot. So my argument to you is, on the long run, you're probably better off doing this: buying it on Monday, taking profit on Tuesday, being done for the week, or move your stop to break even and plan on this going up until the end of the year. Right? Kevin, at FX Bootcamp, there's like the fundamentals course that goes over macroeconomics and central banking, right? Like within 3 or 4 hours of the videos, you're managing the balance sheet of a commercial bank, that kind of stuff. Maybe that would help. So maybe visit fxbootcamp.com, check out some of the video training courses. It's one way of doing it. Okay. So we're just sort of stalled out here. And I think it's because it's decision-making time because of all of this. The market's trying to decide, will it go up for the rest of the year or not? And that's why some people are selling it high. That's why some people are buying it low. Amateurs, of course, are in the middle, doing neither and both at the same time. So if you did have a bias preset, a lot of these moves were catchable if you were only buying. There was a few here. Now, you might have bought this and had some tough luck with it, but that can happen. Obviously, in trading, that can happen. But the other ones are working fine, and you'd be buying and letting it run, and other people are selling and letting that run. And it might be a little bit frustrating, but bulls and bears are probably profitable on that. It's when you don't is when you're not profitable. But, a swing trader made, what was it, 150 pips? So bought at 43, out at 45. Yeah, like, look at this. In a day or two, made 250 pips on pound yen and done. Right? I mean, that's the thing. You have to decide. If you bought it on Monday and on Tuesday you have 250 pips profit and you're in the take profit zone, you should probably just take profit and be done. Just be done, right? Same thing like on this CAD yen. This is clearly a buy zone on Monday. Just absolutely, totally clear. And then going back to the week before, this is a take profit zone for bears. So this first move's bears getting out. And then clearly bulls got in on Monday and it's gone. There's nothing to it. That's just a very, very basic swing trade. And it moved, what is that, 150 pips? 140 to 150 pips, yeah. So the other one, so, you know, pound yen moved 250 pips. CAD yen moved 150 pips. Now, we did this in the swing trading group on Thursday, not even Friday. Right? Amazing, right? Kiwi. I don't know if you guys remember doing all this, but we're picking up prices where like it just cannot fall further. This being one of those zones. Like if it goes an inch lower than this gray zone, I'd really have to question it, right? So now we're kind of maybe bending the 21 here. Drop it into smaller time frames. You want to look at weekly pivots. And it's not good. Okay. Yeah, you might have bought it here and here and here, but this was disappointing. So there's a lot of caution on this. I think one of the things I discussed was you can just simply trade it like a double bottom or let it double bottom higher high and then buy the higher low, right? But like this kind of failed and that kind of failed. Like you really, as a bull, really wanted this area to hold. And I think we talked about it then. You can see I have the trade plan. That's what you wanted it to do. This higher high should, you know, all that kind of stuff. The fact that we drop below this line really kills your enthusiasm. Kevin Star says, $1,000, $979. Oh my God, any damn discounts? Do the all trading course. Okay. USDN, someone asked me about it. I'm like, I don't really trade it. You can see why, like the average daily ranges are slower. It doesn't move as well. It's not trending as well because they really should, when markets are healthy, they should both be weak. And when markets are not healthy, another way of saying it is risk off, both US dollar and Japanese yen tend to be strong. So I'm not looking to pull these apart, right? Well, I guess in that case, I am trying to look at pulling them apart. I'd love to trade the dollar on its own, and I love to trade the yen on its own, but to trade the dollar against the yen doesn't make a lot of sense to me. And even when you're right, you typically don't make as much money as everything else. So let's put this into context. This week, the pound yen moved 250 pips in a day. The CAD yen moved 150 pips. How much did the USD yen move? So here's the open on Monday. 80 pips. So like, why would you trade USD yen and make 80 pips when you could made the same trade on the pound yen and made 250? Yeah, inflatable boat service. Yeah, it's like, I spend, yeah, so like I think I said before, since June, I've spent $20,000 on Harvard. Just since June. It's September. Right? So, cheaper than Harvard. Right? Ba 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 ba. Ba 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 ba. Dee 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 dee. Dee 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 dee. Da 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 ba. Cheaper than Harvard. We did the Aussie yen. ZAR we did. Kiwi. All right, I guess we're done those. Let's do a couple of requests, and then we'll call it a day. How can I help you? Can't we arrange a payment plan? I think you can do that through PayPal. Yeah, one payment. No, I think, no, PayPal offers that. Funny thing, my American Express has something like that now too, and I keep getting emails from them. They're like, Wayne, if you want to spend a lot of money in one big chunk, we'll let you pay it off over time. And it's like super low interest, and they're like, and the fees we charge for it, we'll waive all the fees. You pay almost no interest. And I'm like, what? Remember how American Express just wasn't like, they're like, we're not a credit card, right? We're a charge card. Well, now so like I can buy a car on my credit card, and they'll allow me to basically pay it off in pieces, and it's not an interest rate like a credit card would offer. It's basically like a loan on the card, and because it's a new service from them, they allow me to do it for cheap. And I'm like, oh, that's really strange, but like I don't really need anything. I don't know what to do. I thought maybe I'd go buy like a golf cart. But anyways, it was interesting. Okay, so pound, Aussie, pound, dollar. I thought I did that, didn't I, Johnny Boy? I'm pretty sure I did. Yeah. Yeah, so anyways, let's do pound, Aussie. I'm okay with that. We did that the other day, didn't we? So we can revisit it. Sure, I get that. That makes sense to me. Pound, I guess I have to have it in the scan pound area. Oh, Kevin. All right. Kevin, you absolutely need the fundamentals course. Like, I can answer that question, Kevin. I can give you the 2-minute answer, or I can give you the 24-hour answer, meaning there's 24 hours worth of videos leading up for you to actually do the math, right? Like, you can actually bust out, do the math in the fractional reserve banking and say, oh, wow. Right? Yeah. So you just need the fundamentals course, bro. If you don't know that, that's what you need to know. You just identified the thing you don't know. So now you know what to get so that you know. Perfect. Boom. Okay. All right. So pound Aussie should have been in here. There it is. That's what people say. All right. going back to very, 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 very basic swing trading 101. Bears sold it here on the first day. Bulls bought it here on the first day. And both of them potentially made money, or nobody lost money on this one. Okay? I thought I did oil too. Am I going nuts, guys? I did oil, didn't I? Or did I skip oil? I apologize. I had gold open. I must have screwed that up. So I apologize. Sure, I'm happy to do oil. All right, so anyways, going back to this, it's very, very basic, straightforward. Boom. You look at this and you're like, you know exactly what to do. And bears were profitable for like more than a whole day, actually. I guess it was a couple of days. Bears were totally profitable. Okay. Problem is, it's not a bearish market. Well, that's their fault. They counter trend traded, they paid the penalty, or they made a little bit of money, which means, you know, they might have been hedging a different market or something. That's fine. Now, bulls look at this, and in less than 2 seconds go, I know exactly where I want to buy. See, that's the whole point, right? It's like, just, if you know how to trade, you open it, it's literally less than 2 seconds. You're like, I know my price. That's how you're supposed to be trading, guys. You don't open up the chart and say, oh, I guess it means it's going to fall now, which you know you used to do, or maybe still do now. If that's how you trade, you're doing it wrong. You will continue to punish yourself until you go bankrupt or you learn. You should look at this and say, oh, my price is, 177.88. Let's just call it, what is that? 178. It's just hard to see, right? The point is, on the first day of the month, price was here. And you open up your chart and you say, 1, 2, oh, I want to buy down here. That's it. You see what I mean? If you were a bear on the first day of the month, you would have looked at this and said, holy crap, there it is. It's perfect. It's perfect. What everyone else does, I'm not sure. I don't know. There is nothing else on this chart than that, guys. When I open this up, it's like, it's clear as a bell, slap in the face. If you're a bear, you're like, holy crap, that is awesome. And if you're a bull, you look at this like, okay, it's going to come down to 178, and then I'm going to buy it, and I'm going to ride it up. And that's that. There is nothing. It's not even debatable. I don't know what there is nothing else to me. Now, which one is right? I don't know that, and you don't know that. I only know that if I'm a bull buying down here, I mean, that is, oh my God, so straightforward, right? And if you're a bear, you'd look at that and you're like, that's perfect. Well, it's perfect on a weekly basis, which is another sort of a hint. But this monthly basis move here is just like, oh, just gorgeous. Or wait, that was a monthly. Oh, it's a monthly too. So no, it was monthly. So it was just like, if you were a bear and didn't sell that, you just don't know how to trade. Or you were not a bear, and that's fine. If you're a bull, this isn't the best entry. It's an aggressive entry, but it is the beginning of the entry, right? And if it went a little further down, you would have bought that too. So you would have had two prices. So the first day of the month, we were way up here, and you're like, ooh, we're way out of position. I'd rather buy it here as plan A or buy it here as plan B. Okay. And like I said, we're talking about 2 seconds worth of analysis. Okay, swing trading. Cool. And guess what? The bullish one won. The bullish trade plan won. But look at the bears made money here, and the bears made some money here, and there might have been scalping and all that kind of stuff, but off we go. Now, based on this, the market should continue further, right? Oops. On our way to the target. And there's the target. Okay. So that's the monthly basis. So let's go back into a smaller time frame here. And what was it like in the beginning of the month? Well, you might even say already, you're like, but Wayne, that was 2 weeks ago. But, well, how could you possibly trade a 15-minute chart or an hourly chart if you don't know where the market is going? You see, like, you have to have that concept first. That we were supposed to go a little higher. We were supposed to go to 184.25. Okay? So you can just say 184. Now, there is another potential. You can go a little higher. Right? It could go to 185.50, I guess that is. Or 185 is sort of, let's just say between 184 and 185. Perfect. Okay? So with that in mind, these smaller dips are important. This is maybe where your Fibonacci comes in and all that kind of stuff. But you can see there's more to this than Fibonacci. This Fibonacci would not have helped you buy here or anything. Okay? But you have to have the context of the market. Okay? So buying it now, for example, is a very difficult thing to do. It can be done. But I say it's difficult because well, I guess if the opposite of difficulty is ease, the easy way to have bought this was in these pullbacks. And we didn't get enough of a pullback. So it's very, very bullish in a bullish market, but you can't get a good price. Okay? You see what I mean? You'll also need a good price. There's more to trading than buying in a rising market. That's really good. You do need retracements, but you need something that is both, well, I guess conservative, disciplined, but most importantly, repeatable. I used to talk about that a lot, let's say 12 years ago. I used to talk about, conservative, repeatable, conservative, repeatable, conservative, repeatable. And this is tradable. You could probably be profitable, but it's not necessarily a situation that is conservative and repeatable. Okay, so the repeatable part would have been like if Monday morning had opened and we got down to here, that is a buy. That's a buy every day of the week. Well, I shouldn't say every day of the week. But that is a buy. That's exactly what you would have hoped for. In this case, we open out a position. It's bullish, it's hot, but the price isn't low enough to be conservative and even repeatable. This is repeatable because that's what you would have wanted, right? The higher high, higher low, retracement back into a roll reversal on a pivot, on a psych level, boom, right? So now we got this whole issue of, okay, well, maybe this is just dropping down into this and will then become a higher high. Yeah, well, but on the smaller time frame, like let's say a 15-minute chart, we have this this drop, this lower, this breakout almost, because there was sort of support going here, and there's resistance here, and then breaking out to the downside just gets you down to here and then back up. Yeah, you could buy a dip into here, which means you're buying it at like 82. We're at 82.50. Maybe that's enough. So, like, could you buy it somewhere between 82.50 and 182? Ideally closer to 182. Yeah, and you probably even would make money. It probably even would keep going up because of our idea of this going up to 184 to 185. So yeah, if you could buy it at 182, yeah, then there's 300 more pips or something, right? Could you buy it at 181.62? Yeah, well, 181.62. Yeah, that's, well, wait, 181. Way down here. So I don't know how you came up with that number. Well, let's just try to apply that. 181, 92, 181. Okay. 181. What did you say? Could you buy 181, 81, 622? Well, the problem with that, again, if you're using Fibonacci, in a situation like this, you would want to use Fibonacci, right? Higher high, higher low, higher high, higher low is what you want. That's a trend, right? So if you're measuring from, let's say, here to here now, having it go down to 1.81622 makes this 100% retracement, which is not ideal for a bull. If you got that retracement, it's technically not bearish, but it's trying to tell you that you are now vulnerable to a lower high. And that would then make you vulnerable to a new lower low. So you're basically asking me, is it okay to get 100% retracement and be a bull? No, it's not. If anything, your best case scenario now, so you're vulnerable to a potential reversal, but your best case scenario now is really range bound. Okay, because if you make 100% retracement and it doesn't reverse, then you're just going from support to resistance again, and then probably resistance back down to support until it breaks. So DI says, 81,622. No, you're probably a bull, and no, you probably would not want that, okay? So I would rather it make a higher low, higher high, okay? And these market conditions are already mediocre, so really I think the best I could really hope for is to have this go up to 184 and some change, and then have it wimp out. Okay, unless things change. Right? And over time, maybe things will change and this will take off again. Great. But it doesn't seem to be that at the moment, if that makes sense. So anyways, guys, it was another great trading day. I appreciate you coming by. Don't forget to subscribe and like. If you're watching a recording or you're in the live room right now, when it's over, refresh your screen on the YouTube channel, and then you can leave a comment under the recording. Just say hi or thanks and all that kind of stuff. If you are watching a recording, say hi or thanks or something, but please leave a message. And of course, when you are confident in the skills that perhaps I helped you gain, and I earned your loyalty and respect as a mentor and as a coach and as an analyst and maybe as a human being, would you please consider Traders Way as your broker when you're ready to trade real money? And in the meantime, if you're trading a demo, would you swing by Traders Way and open up a demo account and once again give us another means to earn your loyalty and respect by offering you world-class customer service, competitive spreads, and fast execution speed? Thank you. I'd appreciate that. So peace on earth. May the pips be with you. May our profits be above average. And I will see you tomorrow. Cheers. Thanks again. Bye-bye.